All right. Good afternoon, everyone, and welcome to today's webinar on merchant pricing models in the healthcare industry. I'm thrilled to have you all here as we dive into the nitty-gritty of interchange plus and flat rate pricing models. By way of introduction, I am the voice behind the curtain, Peter Haas. I will be your guide today. Here at Next Trust, I work with our resellers, but I personally joined the ranks of healthcare many years ago as an executive director in the long-term care and rehab space, where, just like in your office, every penny counts. That's one of the reasons I'm really excited for today's topic. Now, before we begin, we understand that questions will arise during the webinar from many of you. However, to ensure all questions are answered promptly, we ask that you please either write down or remember your question for later. And during the last few minutes or so of the webinar, we've set time aside specifically for Q&A. So in today's webinar, we want to cover the differences between interchange plus and flat rate pricing models. To do that, we'll analyze the costs associated with both and how they're set up differently. We'll go through some common misconceptions and debunk them for you so that you can have a better understanding and not let these misconceptions steer you astray. And finally, we'll talk about how you can look at your individual practice and decide which pricing model aligns best with your needs. So one of the things we used to say at the facility where I worked was hospitals work in dollars, we work in pennies. I don't know if that's relatable to any of you here today, but for most medical practices, every dollar counts when it comes to the bottom line. Because of already tight profit margins, rising costs, and challenges with insurance reimbursements, practices have to pay close attention to any area where there's potential for cost savings. It's a full-time job. One area that is often overlooked is payment processing fees. And we have two main options that exist when it comes to pricing models. There is interchange plus and flat rate. Each option has distinct implications for cost, transparency, and predictability. In order to choose the best solution for your practice, you need to carefully evaluate both approaches and how they align with your needs. So let's begin by diving into what is the interchange plus pricing model. Now, before we read the definition on the screen, which is a good one, let's break this down to a more basic definition for those that are new to payments. Interchange fees are transaction fees that the merchant's bank account, your account, must pay whenever a patient uses a credit or debit card to make a payment to the practice, clinic, hospital, etc. The fees are paid to the card issuing bank, so that's the patient's card bank like Capital One or Bank of America, whatever it may be, and they have to pay to cover handling costs, fraud, and bad debt costs, and the risk involved in approving the payment. There is a lot that happens behind the scenes in just a split second. But if we go back to the screen and to read the more professional definition, I guess you could say, interchange plus pricing passes along the wholesale fees, called interchange fees, that card issuers like Visa and MasterCard charge. The processor then adds their markup in addition to those fees. The benefit is that you only pay the true cost of processing. The downside is that fees fluctuate, so it's less predictable. Now let's look at an example of the cost breakdown for interchange plus pricing. If we have a $100 transaction, the interchange fee could be 2% and with the 10-cent transaction charge, plus a processor's markup of 0.25% or 0.25%. In total, this comes out to be $2.35 on a $100 bill. Interchange fees are non-negotiable. Your payment processor will apply a markup above interchange to cover their costs and profit margin. Generally, their markups range from 0.25% up to about 2%, but they could be higher. Now, after hearing that interchange rates are non-negotiable, your next thought is inexorably, who then determines what the fees are? Interchange rates are set by credit card companies such as Visa, MasterCard, Discover, American Express. Now, with Visa and MasterCard, the rate is set on a semi-annual basis, usually in April and then again in October. Other credit card companies might set the rates annually. Now, each brand determines its own percentages for these fees based on several factors. We're going to go over a few. The first might be card type. Rewards cards have higher interchange than standard consumer cards. Are we really getting those miles for free? Transaction type. Is the card present or not present? Rates obviously go up when the card is not. Payment method. Is it credit or debit? And business type. Qualified healthcare interchange rates apply. On top of this, your medical practice may incur additional fees such as monthly gateway charges, PCI compliance fees, chargeback fees, or reporting or statement fees. So here we are, the pros and cons of Interchange Plus. Pros: full transparency into the interchange costs set by card networks puts you in a better position to understand the source of most of your payment processing expenses, which if we're going to reduce or monitor our expenses, we have to understand where they're coming from. It also gives you the ability to directly see, evaluate, and possibly negotiate your processor's markup above interchange. This is where you have the most control. Let me go over that again in case it was too fast. The ability to directly see, evaluate, and possibly negotiate your processor's markup above interchange. This is where you have the most control. All components are outlined in your statement, allowing you to monitor costs. Interchange Plus often produces lower total costs for the year, saving your practice money. These are the pros. What might the cons be? Varying interchange rates based on modifications to card network pricing makes your overall cost less predictable. Complexity of multiple line item fees may cause analysis paralysis. Too much to review and understand, so some may view this as maybe too complicated. Markup rates and additional fees may also rise over time as processors face higher operating costs. But if we're looking at the two pros and cons here, with Interchange Plus, practices have better visibility into the interchange rates that the card networks have set, the markup added by their processor, as well as any added fees. Although the monthly fees can't be predicted, the total year-end cost tends to be lower. And I think that's huge. Did you know, according to recent industry data, practices using Interchange Plus pricing models typically save around 40% on processing fees compared to those using flat rate pricing? Yeah, you heard that right, 40%. Peter, quantify that for me. Well, there you go, 40%. With that amount of possible savings, it's worthwhile to explore your options to see if your practice could be saving money. On the other hand, flat rate pricing entails a fixed percentage fee per transaction. Fixed meaning it doesn't change, regardless of the card type or interchange rate. Now you might wonder, why does this matter? Simply put, it affects your bottom line. With Interchange Plus pricing, you have transparency and potentially lower costs, while flat rate pricing offers simplicity, but may result in higher fees. With flat rate pricing, the processor charges one flat percentage fee per transaction. It's typically between 2.29 and 3.5%, to be exact. Under the flat rate payment processing model, that same $100 credit card transaction from our example earlier would mean paying a fixed percentage fee and a fixed transaction fee. We'll use industry averages of 2.9% and 25 cents per transaction. So in a $100 transaction, that cost would come out totaling $3.15. With flat rate pricing, all fees are bundled into a single rate charged per transaction. A few things to consider. You will see a single composite rate, which means you pay an all-in rate that includes interchange, markup, as well as other fees. Possibly, there are tiers based on volume. So some providers offer tiered flat rates depending on your monthly transaction volumes. And potentially, there are going to be added fees. You may still get charged additional fees like gateway fees or PCI compliance, etc. The pros and cons of flat rate. A pro, simplicity of a single rate, easy to predict and budget for card processing expenses. If volume tiers are offered, you can decrease rates once volumes increase. And you avoid the changing of interchange fees. The locked-in flat rate provides a level of stability. So what are the cons? There is no transparency into the interchange markup, as well as other back-end costs bundled into the rate. You have limited ability to negotiate pricing since you don't know providers' costs. Rates may still rise over time with hikes from payment processors. I think that's the important one. So I'm going to highlight that one again. The fixed rate, right? Fixed. Oh, it doesn't change, but rates may still rise over time with hikes from payment processors. Flat rate consolidates all costs into a single bundled percentage per transaction, along with any separate additional fixed fees. While this makes it easier to understand and predict expenses, the all-in rate may not provide enough clarity. Negotiating rates also becomes extremely difficult without transparency. What am I even negotiating? Now that we have a basic understanding of the major differences between the two pricing models, let's take a look at the most common and important myths to debunk surrounding merchant pricing. The first one is this: flat rate pricing is always easier and cheaper. The reality is that while flat rate pricing might seem convenient, it often leads to higher fees, especially for practices with high transaction volumes or large ticket sizes. With this pricing method, a flat rate is chosen to cover busy seasons and times of higher rates, meaning that you are probably paying more than you need a decent percentage of the time. The big pro that can be considered for flat rate pricing is that you can budget the same amount always. But again, this amount will most likely be higher than with interchange plus pricing. Myth number 2, interchange plus pricing is too complicated and therefore not worth it. Reality, while it might require a bit more effort to grasp initially, it offers transparency and potential savings that can significantly benefit your practice in the long run. Once you understand the breakdown of costs associated with interchange plus pricing, you can move forward confidently and save money consistently. For anybody that's still struggling trying to grasp this, if you've ever been a part of a house being built, there are generally 2 different pricing models. There's the one where they'll come in and give you a full estimate that says, hey, for the cost of the lot and the material plus our profit and overhead, we'll do it for $1 million. Well, if the price of lumber goes down and you get your lot at a reduced rate, maybe it only costs them half of what they anticipated to build the house, but you still pay the $1 million because it was a fixed rate. You accepted the proposed fee. Whereas if you do cost plus with a builder, they give you transparency by sharing anything that they spend on lumber or plumbing or HVAC, and then there's a percentage above that you pay them. And that way, if they end up saving you money in the long, or themselves money in the long run on materials, you save yourself money. It's no different here. Myth number 3, interchange plus pricing is only suitable for large practices or hospitals. Absolutely not. While it's true that interchange plus pricing can benefit high volume practices, it is not exclusively for them. In fact, practices of all sizes can reap the rewards of interchange plus pricing, especially those with a diverse patient base or varying transaction sizes. I'm going to read it again, but you can see it. It's the second bullet point there. Especially those with a diverse patient base or varying transaction sizes. Whether you're a solo practitioner or a multi-location clinic, interchange plus pricing offers transparency and potential savings. I think this is the last myth, that flat rate pricing is always more predictable than interchange plus pricing. The reality, while flat rate pricing may seem straightforward at first glance, it can actually be less predictable in the long run. Flat rate pricing doesn't account for fluctuations in interchange rates or changes in your practice's transaction volume. As a result, you may end up paying more than necessary during peak seasons or when processing higher value transactions. That's when it becomes less predictable. This is when the transparency of Interchange Plus pricing can allow you to better forecast your costs and optimize your pricing strategy accordingly. Now, how do you make the strategic decision that's best for your practice? It's all about analyzing your specific needs and goals because every practice is unique. It's crucial to conduct a thorough cost-benefit analysis and evaluate the long-term implications of your decision. In the end, choosing between the two models depends on your practice's priorities, pain points, and capabilities. Every medical practice needs to take a strategic approach to deciding, carefully considering your practice's workflow patterns, current and projected payment volumes, financial management capabilities, desire for rate variability, and priorities will put you in a better position to make the right choice. This isn't a one-size-fits-all. Carefully weigh the following factors when choosing a payment processing model. And you'll see these on the screen. Number one, transaction volume. Consider your practice's average monthly transaction volume. If you process a high volume of transactions, Interchange Plus pricing may offer more flexibility and potential savings. Average transaction amount. Evaluate the typical size of your transactions. If your practice tends to process larger transactions, Interchange Plus pricing may be more cost-effective, as it allows you to avoid overpaying for higher value transactions. Card mix. Analyze the types of payment cards your patients use most frequently. If you have a diverse mix of cards, including debit and credit, and rewards cards, Interchange Plus pricing can provide transparency into the varying interchange rates associated with each card type. And then you can make an informed decision from there. Seasonal variations. Take into account any seasonal fluctuations in your practice's transaction volume. Interchange Plus pricing allows you to adjust your pricing strategy based on changes in transaction volume, helping you avoid unnecessary fees during peak season. And the last one on there, long-term goals. Consider your practice's long-term financial and operational goals. Interchange Plus pricing offers potential savings that can support your practice's growth and sustainability over time. By carefully considering these factors, you can make an informed decision that aligns with your practice's unique needs and goals. As you look at your individual business and take all of the considerations into account that we've been talking about, there are a couple final considerations for medical practices specifically. First, know that the majority of credit cards you process are likely those which qualify for a low interchange rate, making this method most likely cheaper for you. Also, understand that only very small transactions tend to make flat rate the more appealing option. As a medical practice, you are more than likely handling transaction sizes that are higher than this nominal amount. However, every practice and situation is unique. At the end of the day, I urge you, each of you, to simply be sure to make an informed decision in order to do what's best for your practice. By being here today, you're already on your way. BillFlash Solutions stand at the forefront of addressing the critical needs of healthcare providers by offering the right payment solutions designed to help your practice thrive with the most efficient methods possible. Leveraging Interchange Plus pricing paired with BillFlash's streamlined payment solutions can maximize the savings for your practice. Providers have noticed a 60% increase in patient payments in the first 30 days by using BillFlash Pay. Optimizing revenue collection stands as a critical factor, not just for the financial well-being of healthcare providers, but also for enhancing patient satisfaction and ensuring the stability of the healthcare framework as a whole. Integration of BillFlash Pay facilitates quicker payments at reduced costs, alongside the provision of a platform for practices to streamline their vendor management. We offer a secure online payment avenue as well as modern EMV terminals within the office for processing payments on-site or over the phone. With BillFlash Online Pay, your payers gain the freedom to settle bills securely at their convenience, anytime and anywhere. They can do this 24/7 through our dedicated payment portal at myproviderlink.com. This liberates staff from the burdens and costs associated with payment handling. BillFlash Office Pay allows you to accept multiple cards using swipe, insert, or tap using our sophisticated EMV cloud-based solution, which also accommodates Apple Pay and Google Pay. BillFlash solutions extend beyond merchant services. Our cloud-based platform provides a one-stop shop for increasing the efficiency of the overall patient billing and payment experience. By using BillFlash, you can consolidate your workflow into a single, easy-to-use platform to manage your billing, payment, and collections processes with ease. All services work seamlessly together to streamline vendors into a single application with unified reporting and a single support phone number to our entirely US-based customer support team. Thank you so much for joining us today. I hope you found this time together beneficial. The payment processing world can be daunting at times. To that end, we have a whole team of professionals ready and willing to help you and answer your questions. To learn more about Pay or any of the other services we offer, whether you're an existing BillFlash customer or looking at us for the very first time, you can schedule a demo today at billflash.com.